Welcome back, dear student. Let me tell you about the most dangerous number in personal finance, $20,000. Not 10K, not 50K, $20,000. You know what's funny? I designed this specific milestone to be the ultimate reset button, the financial neutron bomb that vaporizes progress while making you think you're winning. See, $20,000 is enough to make you feel like a champion, enough to make you think, I finally made it, enough to make you confident. And confidence is exactly where I want you. Because 20K is precisely the number where the financial system stops treating you like irrelevant livestock and starts treating you like a high-value target. You're no longer a nobody with $400 in checking. You're a somebody with liquidity, and liquidity makes you delicious. The moment you hit 20K, the algorithm changes, the offers change, the predators can smell you now. Congratulations, you're pre-approved for a $45,000 auto loan at only 6.9% APR. Upgrade your lifestyle, you deserve it. Limited time, 0% financing for 72 months. And you know what happens? You fall for it. Because 20K in the bank makes you feel invincible, makes you think, I can afford this now, makes you believe the lie that you've escaped.
But here's what I designed into the system. 20K is just enough to give you confidence, but not enough to give you freedom. It's the perfect amount to convince you to finance that new car, to upgrade to the bigger apartment, to finally take that vacation you've been putting off.
And then, boom, you're back at zero. Except now you've got a $691 a month car payment for 7 years, and you're calling it building equity. So let me be very clear about what we're doing in this video. I'm going to show you the insider loopholes I left in the system, the escape hatches, the ways to weaponize that 20K instead of letting it weaponize you. Specifically, the T-bill ladder, how to bypass banks entirely and go straight to the source. The credit utilization hack, how to spike your credit score to 800 plus without spending a dollar. And the 50-50 momentum rule, how to hit 50K twice as fast as the system expects. But first, dear student, you need to understand exactly how the system is about to harvest you. Because if you don't see the trap, you will walk into it. Let's go. The moment you cross the $20,000 threshold, something changes in the financial ecosystem. You're no longer invisible. You're no longer worthless prey. You've become a premium target. Your credit score probably improved getting here. Maybe you're sitting at 720, 740 now. You've paid off some debt. You've been making payments on time. Congratulations. You just rang the dinner bell. The lifestyle creep attack. Let me explain the precision-engineered psychological warfare that's about to hit you. At 10K, you were scared. You were careful. You were a frightened deer protecting every dollar. At 20K, you're confident, and confidence makes you reckless. Here's what happens in your brain. That 20K feels like a cushion, like insurance, like finally I can breathe. So you start thinking, I can afford a nicer car now. My 2012 Honda has 140K miles. I deserve an upgrade. I've been responsible. I've been saving. Now it's time to enjoy my success. You pathetic, predictable fool. The auto loan trap. Precision engineered. Let me show you how this trap works. You walk into a dealership with 20K in the bank. You're feeling good. You're feeling secure. The salesman smells it on you like cologne. What are you looking to spend monthly? Not what can you afford, not what's your budget. Monthly. Because they don't want you thinking about the total cost. They want you thinking about the payment. For just $691 a month, you can drive away in this beautiful $45,000 SUV today. Just $691. That's nothing, right? You make $4,000 a month. You can afford it.
Except that $691 for 84 months is $58,044 total. You're paying $13,044 in interest for the privilege of driving a depreciating asset. And the moment you drive it off the lot, it loses 30% of its value. Your $45,000 car is now worth $31,500. You owe $45,000. You're underwater by $13,500 on day one. Beautiful. Just beautiful. The housing upgrade trap. But wait, the auto loan is just the appetizer. Now that you've got $20K, you start looking at nicer apartments. You've been living in a $1,200 studio. It's cramped, it's embarrassing when people visit. But now you can afford that $2,400 two-bedroom in the nice part of town. That's an extra $1,200 per month, $14,400 per year. Your $20K emergency fund, gone in 16 months, even if you don't spend another dollar. And you will spend more, because now you need furniture for the extra room, and better cookware for the nicer kitchen, and a gym membership because the building has one and it would be wasteful not to use it. Lifestyle creep isn't accidental, it's engineered. The system is designed to expand your expenses exactly as fast as your income grows. You're running faster, the wheel is getting bigger, you're still going nowhere. The social pressure amplification. And here's the psychological kill shot. At $20K, you start hanging around people who have money. Your friends who are making $80 to $100K, who drive nice cars, who live in nice places. And suddenly your 2012 Honda feels embarrassing. Your studio feels pathetic. You don't want to be the broke friend anymore. So you finance your way into looking successful. You're making $48K, but spending like you make $80K. The gap? Credit cards at 24.99% APR. Congratulations, you had $20K saved. Now you have $5K left and $15K in credit card debt. Net worth? Minus $10,000. You just lost a year of your life, maybe two. And the banks? They're thrilled. All right, dear student, enough terror. You get it. The system wants you broke. Cool. Now, let's talk about the escape hatches I left in the infrastructure. 3 weapons. 1. The T-bill ladder. Bypass banks entirely. 2. The credit utilization hack. Weaponize your reputation. 3. The 50-50 momentum rule. Hit $50K in half the time. Let's go. Weapon number 1. The T-bill ladder. Here's something hilarious. Your bank is paying you 0.01% to 0.5% on your savings, right? Meanwhile, they're taking your money and buying U.S. Treasury bills yielding 5.3% to 5.5% in 2026. They're making a 5% spread on your money. But here's the loophole I left. You can go directly to the source. Skip the middleman. Buy Treasury bills yourself. Go to treasurydirect.gov. It's the official U.S. government site. Open an account. Takes 10 minutes. Here's the strategy. The T-bill ladder. You take your $20K and split it into 4 5K chunks. 5K to 4-week T-bill, 5.3% APY. 5K to 8-week T-bill, 5.4% APY. 5K to 13-week T-bill, 5.5% APY, and 5K to 26-week T-bill, 5.5% APY. Every few weeks, one matures. You get your money back plus interest. Then you immediately roll it into a new 26-week bill. It's a perpetual cycle. Your money is always working, always liquid within weeks, always earning 5% plus. On $20,000. Bank savings at 0.5%, $100 a year. T-bill ladder at 5.3%, $1,060 a year.
That's an extra $960 per year for doing literally nothing except clicking a few buttons.
Why does this loophole exist? Because the banks need you to be lazy. They need you to not know this exists. The entire fractional reserve banking system depends on you being too stupid to go direct.
Prove them wrong. Weapon number 2, the credit utilization hack. Now let's talk about weaponizing your $20K to spike your credit score without spending a dollar. Your credit score is 30% based on credit utilization, how much of your available credit you're using. If you have a $10,000 credit limit and you're carrying a $3,000 balance, that's 30% utilization. Anything above 10% utilization starts hurting your score. Above 30% and you're in the danger zone. But here's the hack. If you increase your credit limit, your utilization drops. Same balance, higher limit, better ratio. Here's the play. You call your credit card company. You say, I've been a customer for X years, my income has increased, I'd like to request a credit limit increase to $30,000. They see you have $20K in the bank. They see you've been responsible. They approve it. Now your $3,000 balance is only 10% utilization instead of 30%. Your credit score jumps 30 to 60 points instantly. You didn't pay off any debt. You didn't change your behavior. You just weaponized your reputation. Now scale this across every card you have. Card 1, 10K to 30K. Card 2, 5K to 15K. Card 3, 8K to 25K. Total available credit, $70,000. Your utilization across all cards drops to under 5%. Your credit score hits 800 plus. And you know what happens at 800 plus? You qualify for the absolute best rates on everything. Mortgages, auto loans, business credit. On a $400,000 mortgage, 720 credit score equals 7.5% APR equals $2,797 per month. 800 credit score equals 6.2% APR equals $2,456 per month. That's $341 a month savings, $4,092 per year, $122,760 over 30 years. You just saved $122,760 by making a few phone calls. This is what I mean by weaponizing the system. Critical rule: do not spend this increased credit. This isn't permission to go shopping. This is a strategic tool for credit score manipulation. You increase the limits, you lower the utilization, you boost the score. Then you lock the cards away and never touch them. Weapon number 3, the 50-50 momentum rule. Now let's talk about getting from 20K to 50K in half the time. Most people make a critical mistake at 20K. They treat it all as emergency money and keep it sitting in one account doing nothing. Wrong. Here's the rule: 50-50 split. 10K equals emergency buffer, untouchable, boring, safe. 10K equals opportunity fund, aggressive, working, hunting. Emergency buffer. This is your don't die money. Car breaks down, emergency buffer. Medical bill, emergency buffer. Lose your job, emergency buffer. This sits in a high-yield savings account or T-bill ladder earning 5% plus. You never touch it unless it's a genuine emergency. Opportunity fund. This is your get-ahead money. This is money you use to invest in index funds, VTI, VOO, VXUS, buy I-bonds, currently at 5.27% APY, inflation protected. Fund a side business. Take a certification course that increases your income. The opportunity fund grows faster because you're taking calculated risks. The emergency buffer grows slower, but it's always there protecting you. Here's the magic. As each bucket hits 20K, you split it again. Emergency buffer hits 20K, split into two 10K accounts. Opportunity fund hits 20K, split, and diversify. This is how you go from 20K to 50K to 100K exponentially instead of linearly. Traditional saving, 20K to 30K to 40K to 50K, slow, linear. 50-50 rule, 20K to 35K to 55K to 85K, fast, exponential. Why? Because you're using both defense and offense. Most people only play defense. They save and protect. Smart people play both. At 10K, I told you to use 2 banks for friction. At 20K, you need 4. Here's the architecture. Bank 1, daily operations, checking. Rent, groceries, bills. Keep only 1 month's expenses here. Rewards checking, earning 3 to 4% if possible. Bank 2, emergency buffer, high-yield savings. Your 10K untouchable emergency fund. Different bank than checking. HYBSA earning 5% plus or T-bill ladder. Bank 3, opportunity fund, brokerage. Your 10K aggressive growth fund. Fidelity, Vanguard, or Schwab. Invested in index funds, I-bonds, etc. Bank 4, the forbidden vault. CD ladder or long-term. Any money beyond 20K goes here. 12-month CDs earning 5.5% plus, or long-term brokerage positions. Zero access for minimum 12 months. Why 4 banks? Maximum friction. Want to impulse buy something? You have to. 1. Transfer from emergency/opportunity bank. 2. Wait 2 to 3 business days. 3. Still want it? Transfer again. 4. Wait another 2 to 3 days. By day 4, you've forgotten why you wanted it. The friction saved you. This is psychological warfare against your own weaknesses. You're building a system that protects you from yourself. The automated waterfall. Here's how money flows through this system automatically. Paycheck to daily operations, Bank 1. Auto transfer $500 to emergency buffer, Bank 2. Auto transfer $500 to opportunity fund, Bank 3. Anything left over after bills, forbidden vault, Bank 4. You set this up once, then you never think about it again. Your wealth builds automatically while you sleep. So here we are, dear student. You now understand the trap, the 20K confidence trap that resets most people back to zero. 87% of people who reach 20K are back under 5K within 2 years. They bought the car, they upgraded the apartment, they financed the lifestyle. Are you going to be one of them? Or are you going to be the 13% who weaponize it? Most of your friends, the ones driving those financed SUVs, living in those upgraded apartments they can't afford, they're gonna die at this milestone, suffocated by payments, drowned by lifestyle creep. Will you be the one I actually taught to hunt? Or will you be another deer walking into traffic wearing designer clothes? One action, right now. Open treasurydirect.gov and buy your first T-bill. Call your credit card company and request a limit increase. Set up your 4th bank account for the forbidden vault. Not tomorrow, not when you have time. Right now. Pause this video, do one of those 3 things. Subscribe to this channel if you have the guts to keep learning the system. Hit the bell if you're serious about becoming a hunter instead of livestock. And leave, seriously, just leave right now if you're comfortable being prey. If you enjoy financing your life, if you're happy being harvested. The banks are counting on you to fail. Your broke friends are counting on you to stay broke so they don't feel alone. I'm counting on you to prove them all wrong. 20K is not the finish line. It's mile marker 2 in a marathon. The race is just getting started. Don't be a fool twice, dear student. I'll see you at 50K.